Hi everyone, this is Cole Braithwaite, your commercial real estate expert, coming to you again with another video on the Q2 2024 GTA industrial market update. I wanted to share with you what the activities I'm seeing in the market and give you an idea, depending on where you are, whether you're buying or selling, how you can take advantage of some of the trends that I'm seeing going forward. So what we'll cover in this presentation, and I wanted to keep this presentation short and concise and give you some real nice bit of high-level chunks of data and information that you can make actionable decisions on going forward. But we'll cover the industrial market sales activity of sales transactions and sales volumes, as well as once complete, then I will go into what this means for you if you're a buyer or a seller and how you can implement some of this going forward. So what I like to take a snapshot of is what I call the middle market in industrial, anywhere from 10,000 to 100,000 square feet of sales of square feet of size or building size, and how that market is doing in terms of the number of activities that's occurring. What we're finding is that compared to last year in Q2 2023, this year it's been flat. We saw $869 million worth of transactions last year at the same time, and we're at 870 million today. So essentially, it hasn't changed in terms of the sales volume. And what you'll see on the quarter-over-quarter numbers is that you'll start to see how there was a bit of a dip, and now we're right back up to where we at really essentially at peak levels in terms of activities. On a transaction volume number, we're up again. We saw 57 deals done last year. So what's interesting is that we're seeing the price per deal decrease, as we saw 57 deals completed in Q2 to hit that same $870 million number, in comparison to 72 transactions this year to do that same number. So we're seeing smaller sizes but more deals that are occurring on an overall market basis, which signals to me that interest rates are playing a factor. As you get into higher numbers, financing plays a bigger role in terms of making the deals work. It's interesting, we're starting to see smaller deals pencil because buyers may have a lot more capital to meet those financing requirements to make deals make sense. So that's what I take from it, which I find is interesting. If you take a look at the quarter-over-quarter numbers, we start to see this dip. So last year Q2, we saw a huge peak in terms of the sales volume, like what I mentioned. Then right after that, we start to see really some of the effects of what the interest rates are starting to do and take effect into the market, and we saw pretty much a dip in sales volume, and really transactions as well too, you'll see, but in sales volume really to the lows. So in Q1 we're up 59% from Q1. Q1 saw $548 million worth of deals. That's roughly about $300 million more we're seeing this quarter, which is interesting in terms of the activities. So we're starting to see a recovery, even though the longer the interest rates played into it, you would have anticipated, transactions to continue to slow. So it's interesting to see how it's increasing. If we look at a transaction basis, we are also up about 60% from the previous quarter. So we saw 7 deals completed, or increased from 45 deals, or increased from 45 deals. So we saw more transactions occur this quarter than previously, but we're up about 60% from the 45 deals we saw in Q1. What this signifies to me, and what I'm hearing, and what's interesting is what you're hearing on the ground and what you're feeling in the market in comparison to what the data is saying, is that what I can say anecdotally is that the market is slowing down. We're not seeing the price appreciation grosses on the rents or on the price per square foot numbers. Demand is still there. It's just buyers are limited now in terms of what they can pay because of the financing requirements and the interest rates that they have to now qualify for to make deals make sense. It's getting more challenging for investors to find yield, specifically in the GTA market, just because the cap rates are so low. They're competing against users that do not need, that aren't looking at it on an investment basis per se, and which makes it challenging, even though the rents have been at historically high numbers for a long period of time. Now, what this ultimately means for you if you're a seller is that asset size matters. So like I mentioned, we're finding that the average size of the transactions are shrinking. Really, south of $10 million is really that number where if you're in that snap bracket in terms of building size and valuation, there's still a lot of activity that's occurring. As you get larger and over those numbers, financing plays a bigger part, and it's harder for buyers to get deals completed at those numbers. And it makes it even more challenging, even if it's a user that's going to use it. Their business cash flows may make it challenging going forward. Also, what we're still finding is users are driving the market. What that means for you is if you're a seller, you have a tenant that's left your building and there's an opportunity to sell it as a vacant building, that's more advantageous than having it tenanted, because a user is going to pay more for it because they can utilize it for the space and not look at it on a financial investment or cap rate basis based on the rents that they would collect against, the interest and the financing costs and expenses that they would put on the other end. So this is ways in which you can maximize it, and we're still seeing the users drive the market. Now, ultimately, what I will mention is that I do see this slowing down, especially as the Bank of Canada indicated they've cut 2 interest rate cuts. There's more to come over the next year, 18 months. But what that ultimately means is that the economy is not overly doing well. How that reverts to you as the owner is that your tenants may start to see slowing activity in their sales, and you'll see downward pressure on their ability to pay the increasing rents on renewals that they have. So keep in mind this going forward in terms of how this can play out in the market. If you're a buyer, what I would consider is looking at larger assets. And when I say larger assets, anything really over 40, 50,000 to about 100,000 square feet. You're seeing a lot less activity in the amount of transactions in that sort of space, which lends you a little bit of an opportunity to negotiate a little bit more, get a little bit better on a price per square foot basis. Also, these larger assets may provide opportunities to subdivide into smaller units that you can then lease out and kind of reposition that way. So there could be some more strategies there that I'm finding, which could be an effective approach. And then also be wary of high rental rates. So a lot of times we're seeing assets come to market at peak numbers, well north of $20 a square foot net for tenants. And my feeling is that even though that may be the market rate for what it's worth, my suspicion is that long term, I don't know whether the tenants are going to be able to hold that rate going forward. And if that's the case, and you purchase an asset at that basis at those high numbers, and let's say in 5 years you go to a renewal and the market is less, or the tenant can no longer handle it and they're looking for a decrease, all of a sudden you've squeezed and affected your purchase price and your returns because you're locked in at those numbers. So obviously as a seller, it's great, yeah, sure, show high numbers, that can help, but I think there's to a point as to where it makes sense, even though that's what the market suggests, and you want to push it to as much as the market can bear, but factor in that there's renewal risk and future risk of maybe even the tenant not even being able to operate long term, if that's the case. So something to keep in mind going forward. Ultimately, this concludes the end of the presentation, and really whenever you're ready, there's 3 ways that I can help you. Number 1, I can provide you a pinpoint price analysis on your asset and give you an idea of what the accurate value is in this market. What I'm also providing to a lot of clients is asset optimization analysis. What this essentially is sharing with you ways in which you can maximize the value of your property, whether it's income-wise, repositioning it this way, or moving tenants, or different strategies, even zoning-wise, that may be able to unlock some more value out of the asset that you may not be aware of. And if you're an owner of industrial property throughout the GTA, we have a ton of investors that are looking for assets and looking to purchase. So we can provide you with an off-market offer depending on your depending on your property in what I call the silent market. So if any of these ways are of interest to you, or you have any more conversations just about the market or anything specific with your asset, please reach out and I will be gladly able to help you. So until next time, take care and look forward to keeping you in the market, guys. So thanks.